Hey everyone, Tom Cafarella here from Ocean City Development. Today we're going to be talking about the worst way to invest in real estate. So for those of you who are worried about losing money in real estate investing, you should be if you're doing it the wrong way. And the worst way to do it, the way that you can lose money, is when you take market exposure. And what do I mean by taking market exposure? Taking market exposure effectively means that whether or not you make money on the deal is depending upon what happens with the real estate market. And the reality is that even though nobody can tell you exactly where the real estate market is going, as of today, 2017, there's a lot more possibility for the market to go down than for it to continue to go up. So we need to make sure that if we are fixing and flipping, and we're investing in real estate, that we're taking as little of that market exposure as humanly possible. So how do we avoid it? How do we avoid making these mistakes and possibly losing money? The first thing we want to make sure that we're doing in this market, and really in any market, is to make sure that if we are doing a fix and flip, that we're doing a very, very quick turn fix and flip. And what I mean by that is we don't want to take on really, really long projects. So projects that take us a year or 2 years or sometimes even more than that, we want to take on a project where we're buying and selling in the same exact market. The great thing about real estate, as opposed to the stock market or the bond market, is that when real estate is going down, it quite literally can't happen all at once by the function of how real estate is sold. So the stock market, by contrast, can go down 20 or 30% over the course of a few month period, and sometimes even faster than that. Where real estate, even when the real estate market is going down, it goes down slowly. Because the way that the real estate market goes down is when inventory starts to accumulate. And once the market starts to go down, it doesn't mean that people are going to want to move out of their houses that particular day. So it happens over a slow period of time. So as long as we're doing quick term projects, and what I mean by that is projects that we can buy, renovate, and sell within a 90-day period, we are insulated, okay? So we're buying in the same market that we're selling in, and that eliminates the risk, the market exposure, right? As opposed to doing a project that we buy, renovate, and sell a year later. Because a lot can change in 1 year. Even though real estate doesn't go down that quickly, a year is a long enough period of time where we can lose 10 or 15% value, which is why we want to do 90 days or less. Because if the real estate market falls, say even 12% over the course of a year, if we're only fixing and flipping within 90 days, we're only taking a quarter or 25% of that 12% exposure, or 3%. And 3%, you can forget about that. If you don't buy your deals with a big enough margin where 3% doesn't matter, you're doing it the wrong way anyways. So we want to do them really quick turn. The other thing that we can do to take no market exposure is to wholesale. And right now in the market that we're in today, there is no better opportunity than wholesaling, because not only are homeowners overpaying for deals, but fix and flippers, investors, are overpaying for deals. So I am seeing in some markets where people who are wholesaling deals are making the same, and in some cases more, than the people they're actually wholesaling the contracts to. So for those of you who are unfamiliar with the concept of wholesaling, all it is when you get a property under contract from a seller to sell you a property, and then instead of you closing on and buying that property, you're actually giving that contract to another investor for a fee. And when you wholesale a deal, there's no defined amount that you can make. But typically speaking, people in this market are making anywhere from $10,000 to $30,000. Now, I made at one point $300,000 on a wholesale deal. That is not typical. But I've also made as little as $1,000 on a wholesale deal. So what you make on a wholesale deal is all depending upon how good of a deal you get. The better deal you get, the more you're going to make, period. But wholesaling, in terms of this topic today, about the worst way to invest in real estate, which is taking market exposure. Wholesaling eliminates that market exposure completely. The third thing you can do to avoid investing in real estate the worst way is if you're buying a multifamily property, to make sure that it cash flows on day one. You should always do this, right? So you should never buy a rental property based on appreciation. You should always be cash flow positive on day one. And now there are some markets across the country right now where that's almost an impossibility. Even in my market in Boston, it's tough to buy stuff that cash flows on day one, but you can't let that rule of making sure that you cash flow on day one stop you, right? So you need to make sure that you're getting great deals, you're getting properties below market value so that they do cash flow on day one, right? So doing projects, to summarize, to do projects that are lengthy in this market is very, very dangerous. So make them quick turn if you are going to close on them. Wholesale them if you don't want to take any market exposure whatsoever. And if you're buying a property to buy and hold, just make sure that it cash flows on day one. And like I said in the beginning, if you're worried about losing money in real estate investing, that is a true fear. That can really happen. And you want to make sure that you're not making these mistakes. One of the ways that you can make sure that you're not repeating mistakes that others have made is by working with me directly in your market. So I'm actually looking to expand. I'm looking to go into other geographic markets across the United States and implement my systems and my tools. The benefit to you is that you're not going to make the rookie mistakes that I made on day one, because I'm going to make sure you avoid those. If you're interested in learning what a true partnership looks like, working with me directly, where I only make money when you make money, go to www.realestateinvestingiseasy.com and put your email address in. Once you do that, you're going to get a copy of the video that I've created that will go into much more detail about what working with me in your market looks like in a true partnership fashion. Now, even if you don't want to work with me in your market, I get it. You know, my feelings might be a little bit hurt, but don't worry about that. Putting your email in is going to get you a little bit more benefit as well. It's also going to get you lifetime free access to any of my fix and flip events that I host every other month, okay? So I host 3-day workshops, some of them in my office in Boston and some of them in other parts of the country. Once you put your email in at www.realestateinvestingiseasy.com, you will get free access to all of those events, and you will also get free access to my completely private Facebook group, Questions for Tom, okay? So you can't get into that group unless you put your email into that URL. Once you're into that group, you're going to have 24/7, 365 access to ask me questions. So if you have a question on a deal, you can literally go into my Facebook group, which I monitor, and I'm going to answer that question for you within 24 hours. So if you have questions on what should I be doing for marketing, how can I raise capital for my deals, you're going to type that question into the Facebook group and you're going to get an answer from me. So you can't do that unless you go to www.realestateinvestingiseasy.com and put your email in. So take action right now and go to that URL. Thanks, guys.